Hello, I'm Simon Reed, the personal finance editor at The Independent. Now, there's a tax deadline coming up. It's your last chance to make the most of this year's ISA allowance. It's an important allowance. So, to find out more about it and what you can do with it, I've come to talk to an investment expert. His name, Darius McDermott. He's from FundCalibre. Hello, Darius.
Hello, Simon.
Thanks for talking to us today. Now, ISAs, what can you put in an ISA?
Well, the ISA allowance has been raised in recent years. It's now £15,000 in this tax year and £15,240 in the next tax year.
Okay, so that's this tax year which you have to take advantage by 5th of April.
5th of April. 5th of April actually falls on Easter this year, but most online platforms will still take subscriptions right up till sort of 10 o'clock on the 5th of April.
Okay, brilliant. Now, there's cash ISAs and stocks and shares ISAs, but the government's made them more flexible, haven't they?
I mean, it's an absolutely fantastic, flexible, simple, flexible product, which now you can have cash and investments in the same wrapper and transfer fairly easily between them.
Well, you see, that's the key thing, isn't it? I mean, I look at simple savings accounts. You know, if you look at savings accounts and you might get, I don't know, 1.5%, 2% top at the moment. If you can get the same amount in an ISA, of course, you get the tax advantages, so they're worth 20% or 40% more, aren't they?
Indeed they are. I mean, on cash rates, you save that straight tax that you would pay in income tax if you held the cash outside.
Yes.
What's more, actually, you can often get better rates in cash ISAs.
Yes.
Which is a bit of an anomaly, but that's just the way that banks and building societies...
Stocks and shares and funds ISAs, you know, the great thing about it, if you can put 15,000 a year now, and you can quickly, within a couple of years, you could have built up 100,000, for instance. Now, all things being equal, that will grow beautifully, and who knows, that you could get 150,000 out of that. And the great thing is, you pay no tax on the growth.
Well, that growth, as you rightly say, Simon, is completely free of capital gains tax, so that's a real benefit. And if you do build up a sizable pot, either as a couple or as an individual, you can then take an income from that pot, either alongside or as instead of a pension, and it is free of income tax. It's one of the often overlooked benefits of ISAs.
I mean, one of the good things about the new flexibilities, isn't it, that you can start off in cash, go into investments, and then if you want to, go back to cash when as you say, you can move fairly freely between the both.
It's such a flexible product. I mean, we wouldn't advocate cash at the current rates because the rates are so low. But in normal times, cash plays 5 or 6% when interest rates are at normal levels. Cash is a very good asset class, just not today.
Another thing they introduced in the latest changes is the ability to pass on your ISA allowance to your partner, haven't they?
Well, this is sort of the final, push for individual savings plans. That you can inherit your partner's ISA allowance. So if you've got, say, 100,000 in an ISA each, and your partner dies, next year your ISA allowance raises by the amount. So you actually maintain all those tax benefits that you've saved through throughout your life, and you can then take a tax-free income from a joint pot. It's hugely powerful and very flexible.
It's a great thing, isn't it? Now, finally, let's talk about people who are thinking about investing their ISA allowance this year, and let's bear in mind that over the next month or so, they could stick up to 30,000 each, and that for a couple of 60 grand if they have it. Now, what should they do with that money? What's a good investment opportunity or exciting investment opportunity?
So equities are not expensive, but they're not as cheap as they have looked over the last 3 or 4 years.
Yeah, I mean, the FTSE's reached record highs.
It has.
So, is it a time to think maybe stay away from...
I just think with the uncertainty over the general election, which is something people do need to bear in mind in the short term, and with equities being, having had a very good run, might think of something like commercial property or absolute return funds, which are a relatively new breed of fund that can make money whichever way equities go, whether they go up or down.
Yeah, they're designed, aren't they, to always make money however the market's performing. That doesn't mean that you're going to get the best deals, but it sort of evens out the risk to a degree.
Well, they're much lower volatility. So if equities are up 20%, a standard absolute return fund might be up 5 or 6. If equities are only up 1, a standard absolute return fund might be up 5 or 6. So it gives you that chance of making nice, smoother returns. And as I say, they can actually make money when equities go down, and some of them have a good track record of doing exactly that.
Brilliant stuff. Okay, well, there's a lot to think about. If you want to make an investment decision, you need to think about all these different issues. Thank you for watching, and do come back, and we'll be discussing further things in future videos. Thank you.